Good morning from Los Angeles. Good morning. Welcome to Trading with Sergio on Wednesday. Today, the markets are ripping. I should have worn my green hat today. I don't know why I didn't, but I should have. It's okay. Let me fix this real quick. Oh, it is fixed. Okay. Okay, good morning. How's everyone doing? Welcome to Trading with Sergio every Monday, Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. And on Fridays, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. I'll go through the positions real quick. So we had President Trump deliver the longest State of the Union yesterday. He broke his own record and he broke President Clinton's record. Not that it means anything. Okay, to be perfectly honest, I did not watch it. I watched like maybe 5 minutes of it. But I had more important things to do. But anyway, so what's going on? Big news: crypto ripping today. I mean, ripping from levels that probably from, I don't know. It started actually before the president's State of the Union. I'm not saying it's related. And it's continuing today. I have a position in BMNU. I'm selling some calls now. I can't wait until I get rid of it, but then they'll probably the bottom. But I'll go through some analysis of gold, silver, and crypto and the markets shortly. We're still stuck in a tight trading range when it comes to the indexes, but then underlying stocks, a lot of stocks are moving wildly, sharply, to the tune of 50, 60, 70% in some cases. And it's there's a lot of rotation going on. Specifically, you can tell on days like today when the Nasdaq is up 250 and S&P is up 0.75%. Consumer cyclicals are being sold, and then today, of course, the big news is after the close, Nvidia earnings are due. Is that going to make us break out of this range or break down in this range? This is the tightest range we've had. Basically 671 and 697 on SPY. And I mean, my experience says the longer we go sideways, the more violent the move is going to be to the upside or to the downside. I have some longs, I have some shorts, just decent green day today. Took some profits on some put credit spreads I had sold. But that's what's going on, and I'm pretty sure X is still having an issue with going live, but I'll post this on X later on. If anybody wants to join, here's the link. If anybody wants to join, especially if you want to talk about BMNR and BMNU, and here's the link. Where it is, it's right there. So if you want to show up, show your pretty face, grab the link. All I ask is you're in a quiet place with a good internet reception, so we don't have any issues. What else is going on? Outside Nvidia's earnings, that's the last one of the Mag 7, right? Mag 7 is basically stalled. That's why the indexes have stalled. So if the Mag 7 doesn't go anywhere, indexes are not going to move. That's a fact, because SPY is a market cap weighted index, and then the top 10 stocks are probably 60, 65, maybe 70% of the S&P 500. That's why we're stuck. We've been stuck. And if you look at Nvidia has been the same price as it was 5 months ago. So, and some of the stocks in the Mag 7 are actually almost to where they were during the April tariff liberation day musical chairs. For example, Microsoft is almost there, and Netflix, right? So good news. My long-term port is absolutely on fire. I said this, if you've been following me for a while, I put the stocks out there. I have 5 now. The additional 5 last one was Netflix that went into the port, and I got assigned shares. I had sold puts that expired last week, last Friday. I got assigned an 88 and 85. I'll take out the premium. My average goes about 83.5. There's potentially they may walk away from the Warner Brothers deal. If they do, stock is $100 stock. Again, none of this is trading, financial, or investment advice. Do your own due diligence. What I do is very risky. Don't follow me. And so I have Google that I paid $152 for in April. It's $310. I have the May 350 calls out on that. I'm trying to, in my long-term port, I'm trying to go 1 year, 1 day to take advantage of the long-term capital gain structure. So it's Google, Netflix now, UPS. So Netflix 83.5, Google 152, Lululemon 182, UPS 96. Those are my cost basis, and Kava 59. Kava today, yesterday earnings came out, absolutely ripping. I think it's up to 84. And I have a members group. In fact, Mike is here. So Mike said, "Are you going to trim Kava?" I go, "Absolutely not. We're trying to go for 1 year, 1 day. I may sell some calls on it at some point, but no, I'm not going to get rid of it. I'm in my long-term port. I don't sell cover calls. Trying to beat the benchmarks, and so as far as pricing is concerned, Lulu is just about even, 180, 181. My cost is 182. UPS 96. Stock is about 118 or 116, whatever. Kava 59. We're at 83, 84 range. Beautiful. Google 152. Stock is 310. We'll easily beat the benchmarks this year if they stay here. Yeah, I mean, what else is there to say? Just pick yourself, create a bundle or create an index for yourself with the stocks that you like. Don't go into some of these meme stocks or whatever, solid companies with good earnings, good cash flow, and enjoy the ride. Netflix gave me the opportunity. I waited literally 6 months to buy it. So puts got assigned. I own it. Google, I just bought the shares. Kava, I got assigned on that as well. In fact, after I got assigned, my cost was 59. Stock went to, I think, 45. But I do like the company. Earnings were good. Well, the forward guidance was really good. So that's why it's ripping today. And plus, it's a heavily shorted stock as well. UPS, I bought it the day they announced layoffs and earnings last quarter. 96. Stock is, I think, 115. So that's up handsomely. So all the positions in it in the long-term port are up. Short-term trading account doing fine. On that one, it's a lot more short-term, obviously, right? Options and derivatives and 2x ETFs and things like that. So please understand that I keep things separately. It's better. I mean, your accountant is going to like you, number one, because you're not going to give him this much paperwork saying do my taxes. I call it separating business from pleasure. Okay, pleasure is trading, having fun. Investing is something else. I highly recommend all of you separate the two. The other thing is, obviously, don't pay bills out of those accounts as well. Okay, a lot of people just commingle everything, and then it's like jambalaya. I'm like, no, don't do that. It's better for you. You can keep track of the stuff easier. And long-term stocks go up. Okay, long-term. That's why you should have a long-term investment account that's probably 10x the size of your trading account. And short-term, yeah, go have fun, trade. Your odds of being successful is low, but go for it. Whatever system you have. If you're a day trader, if you're a zero DTE trader, if you're an option seller, or whatever you are, trading is different. Investing is something that all of you must do because what the government's doing, debasing of the currency and US dollar getting weaker, you have to invest. And that's why 10% of the folks, top 10% in this country, own 87% of all assets. And bottom 50% owns 1% of the assets. So That's why top 10% owns 87% of the assets, because they invest long term. Long term, stocks go up, but then you have to be still patient. Like, I didn't get stuck on Netflix at 150. I waited until 80. Same thing with UPS. UPS has been on its own bear market for 3 years. Stock topped at 350 and then got all the way down to 75, 80. And once it turned, I bought it. So those 5 stocks, again, Lululemon, Google, Kava, UPS, and Netflix. So 5 stocks in there. And I don't keep it more than 5. 5 is probably my max. And maybe I have room for a 6th, but we'll see. The other thing is I don't use margin in the long-term port at all. I don't sell cover calls. I believe in the companies that I'm investing in, not trading, investing in. And, selling cover calls is bullshit. Yeah, a lot of people on X, they go, I don't sell puts, I sell calls. I'm like, doesn't mean anything to me. Investing side. On the trading side, we'll see. We'll see what we have, what's going on. What else? Any other worthy news other than NVIDIA? I'm sure everybody's going to be glued to their screens because NVIDIA may actually save the AI trade, because AI trade, specifically the AI's effect actually on software stocks, such as CRM, Salesforce, ServiceNow, Adobe, has been brutal. I mean, if you're in those Duolingo and Reddit and things like that, I mean, you're in a world of hurt if you're in those stocks. And the favorites of the X crowd, the Hoods and SoFis and whatever, they're also in a world of hurt. They're down 40, 50, 60% in some cases of like HIMS down 75%, and Nova Nordisk. A lot of people just love catching falling knives. I'm like, I don't know how you can be successful catching falling knives, but then if you're a magician, you catch the handle every single time. That I cannot do. Even after 30 plus years of doing this, I don't recommend it. 9 out of 10 times you're going to catch the blade and you're going to slash yourself. And then they go complain. Oh, my account's down 50%. I'm like, yeah, that's because you're hoping and praying stage of your career at the moment, because you bought something and went down 50% on you. For example, Hood. You paid $150 for Hood. Yeah, is Hood could be a $300 stock, like a lot of these fools are saying 5 years from now? Possibly. Could it be a $10 stock? Possibly. So to me, it's like, everybody has an opinion about this thing. For me, riding a roller coaster is better done at Magic Mountain, not done in the stock market. If you do that, you're going to go to most likely you're going to go to the poorhouse, but then mentally you're going to be unstable. Your relationships are going to get hurt because your investment is melting right in front of your face. So I don't recommend it, but then, to each their own. It's your money. Do whatever the heck you want with it. You got to pay your tuition somehow to Wall Street. And a lot of people do. And then once they do it, they don't learn from the mistake. They keep doing it. And I'm like, okay, fine. No problem. What else can we talk about? I'll keep it short today. Well, we can go to the positions and then I'll go through crypto, what I think is going to happen. Is it the bottom? I don't know. I think it's too early to tell. But we will have to see. We will have to see. Okay, you guys can see that. Okay, this is the S&P 500. As I said, it's stuck in a range. Let's go to the big charts. Should we go through the positions first, actually? Yeah, let's do that. Okay, so ADN PLC, ADNT, short 25, 22.5 put credit spread with the money I bought just straight up some calls. I think I'm going to add to that position. ASST rallying today. It's not helping me, obviously. I had a 24 1 reverse split, which is never a good thing. Here's BMNU, up pretty big, 245. Sold some 2 calls and trying to sell some 3 calls, cover calls, obviously. Long 20 calls on Borg Warner, just bought those at like 42 cents. Closed ERO, which I had to put credit spread on. I had put that on at $1.80, closed it at 48 cents. So that's 70%. I don't need to wait all the way to the end. Galaxy Digital, I have some calls on it. But this was part of a four-legged trade that was closed with profit. So I'm just kind of holding on to the calls. Let's see what happens. RCL, I'm short put credit spread at $4.50, 310 300s. I think that's down to 3.5 range. I'll just keep that. I have some put debit spread on SPY. That's like a little hedge, a little underwater, but still in a range, so not too concerned with that. Same thing. I have a TSLL, which is the 2x ETF of Tesla. I sold a put credit spread, 15 lots actually. I sold 15. Hold on a second. Yeah, I sold 1512 put credit spread at 90 some cents, and that's melting away obviously because Tesla is rallying today. And I'm also long $15 calls. This is all March expiration, regular expiration. I bought $15 calls. It was a call debit spread. When the stock went down a little bit, I bought them back at 50%. Today I put out weekly 16.5s on it. So basically all I'm doing is lowering my cost basis. Tesla is in an interesting position. I mean, we could take off here. If we do, great. If we don't, great as well. And last but not least, I'm long 25. I'm long, by the way, BMNU. I'm long 5,000 shares. ZSL, I'm long 2,500 shares. Last month, I bought, that's the 2x ETF, inverse ETF of silver. Last month, I had sold a 2-3 strangle for 96 cents. Those expired worthless, so lower cost basis by 96 cents on something that's $2. Figured that out. And on Monday, I put on the 2-2 strangle on, two short two puts, short two calls. And I did that at 65 cents. I'm pretty sure I did it at 65 cents. Yep, 65 cents. So pretty, at the, I mean, if the stock ends up, if it's under 2, I'm going to get assigned 2,500 more shares. At $1.35, I'll take it. It's at 174 at the moment. And if it's above 2, I'll get called away at 265. I'll take that because last month's 94 cents lowered my cost basis to like under $1, I think. So yeah, that's where that is at. Yeah, those are the positions. I'm looking to put on some positions. If not put on long positions, sell some put credit spread, bring in some dollars for March. I don't deal with falling knives. I like, in my trading account, I like buying high, selling higher. In my investment account, I like buying low, selling high. So there are two different things that you should be able to understand and hopefully do. But if you don't, again, it's your money. Do whatever you want with your money. Again, none of this is trading, financial, or investment advice. What I do is very risky. Don't follow me. You will get lost. So let's look at the SPY. Here's SPY daily. As I said, we've been stuck in this range since last October, actually. Actually, literally today, SPY is where it was last October, like end of October, early November. So we've been going sideways for 3 months. Okay, what's the reason for that? As I said, Mag 10 stalled. Either this is like this is going to resolve itself. This is the tightest the Bollinger Bands have been in the last 3 years. If we break out, I think we're going to quick trip to 740. And if we do break down, we're going to get a quick trip down to about 650 probably on SPY. And, we just wait and then go with the market. Although today's rally is on very anemic volume. And then I can see this being some sort of a distribution because every down day that we get, volume is a lot higher. So some people may follow the Wyckoff. There's definitely some distribution going on from my experience that I can tell. Every down day is high volume. Every bounce after that is very low volume. So these bounces are not trustworthy, and that's what's bothering me a little bit about this. So Nvidia today is up about close to $4, but again, it's been going sideways, right? So is this going to save the market? We don't know. We'll see. Is risk going to be back on? Because risk has been taken off, and a lot of consumer cyclicals, metal stocks, base metals, copper stocks, aluminum stocks have been getting bought over the last 3-4 months. Even airlines, bank stocks, they're all being bought. And then, so if you look at a difference between, let's say, an Adobe, look at that, right? CRM, which is Salesforce, they're bouncing a little bit, but nothing special really. ServiceNow, same thing. But then, same thing with Microsoft. Look at Microsoft. Market's bouncing a little bit, but literally yesterday, Microsoft hit 380 from 550. And at 380, Microsoft is basically where it was last April 20th or so. And that's why Mac 10 or Mac 7, Mac 10 especially, is not pushing the indexes anywhere. The same thing with Amazon. It's bouncing a little bit, but still under its 200 EMA, technically not in good shape. Best one of the group is Google, obviously, and Meta, still, again, back where it was last May, okay? So, yeah, the small caps, mid caps have been outperforming. That's IWM, which is Russell 2000. Pretty close to an all-time high versus SPY. You can tell the difference, right? And one's going sideways, the other one's outperforming after S&P 500 outperformed small caps for 3 years, 4 years almost. Now, last 6 months, or at least 3 months, IWM, which is Russell 2000, is outperforming mega caps and big caps. So Tesla, I'm long TSLL, which is a 2x ETF. I bought it at the 200 EMA, and low risk trade, really. If we do turn around here, though, Tesla could take a leg up, first to 450 and then to 498, 500 range. But again, Tesla is the same price as it was 3 years ago. If you bought Tesla 3 years ago, you're breaking even while the market's up 70%. And here's Tesla going back 3 years. Tesla today is 415, let's say. And where was it for? In November, December of 2024. 2.5 years, right? It's sideways. And before then, it was actually back to where it was, 2023. So it's sideways, right? We're not in it. We're not in these stocks to break even, right? After 2 years. While the index, if you were just in an index, you would have done better. So I don't want to go through each position chart, but I'll just show some charts. And I want to talk mostly about crypto. And is it the bottom? Is it the bottom? I'm pretty sure if I turn my X feed, I'm going to see nothing but crypto bottoming. I'm like, okay, cool. I don't think it is, but the rally came at the right time. Because, I'm long BMNU. That's a long story how I ended up with BMNU, but then managed the position as well as I could, and I can't wait until anyway, I can't. I'm thankful that it's rallying. So let's take a look at IBIT. You know what? I'm going to change the screen real quick. Give me a minute. Let me put myself on the lower left-hand corner here. There's no comment. Something's going on with YouTube, but hey, whatever. All right. So this is IBIT. This is the iShares Bitcoin ETF. Big rally today. Where is Bitcoin? Is it about 68,000? Let me take a look. 69,000. Wow. Big rally. Wow. Okay. Cool. So we did retest almost the 60,000 from a couple of weeks ago, Thursday. We almost retested, and then we're bouncing. So we have a bunch of resistance. Middle Bollinger Band, 20 EMA, 50 EMA. The people are all going to get excited because we had this kind of thing before. We need to build a base here. Retest, 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 solid base. Although crypto has done wilder things like this, for example, but I can't call it a bottom yet. And same thing is happening on Ethereum. This is the Asher Ethereum Trust. Same thing, retested a low yesterday. In fact, we may even made a lower low. Potential bullish divergence on MACD, but again, running into resistance here, maybe up another 3-4%. You know, but then last bottom was also the bottom that just nobody expected, and then it ripped after that. So, you know, crypto is crypto. Crypto is going to do what it's going to do. But technically speaking, the bottom, I cannot call this a bottom yet. We're just running into resistance at 20 EMA. Let's see how we behave when we get up there. And bigger resistance at 50 EMA, which coincides with the lows of the last ledge that we built and absolutely fell apart out of, which was from 2,700 down to about 1,800 on Ethereum. And consequently, right, Ethereum goes up. What's the tail of the dog? So the dog is Ethereum. What's the tail of the dog? BMNR. BMNR up 13% today, as much as Ethereum is up. So 22 bucks, up to 60. Great. But again, please don't draw chopsticks on BMNR. Draw chopsticks on Ethereum. Ethereum, you know, resistance coming up. We'll see how it behaves. Volume is kind of anemic, but again, I'd rather have it up than not up because a lot of people are stuck in BMNR. A lot. Same thing is happening with MSTR and IVIT. In fact, MSTR is not even up, you know, up about 9%. 60 or 457 down to 100, 104. That's enough bloodletting, right? Well, that's because IVIT is going down, right? I mean, this is Bitcoin. If you tell me this is bullish, I'll debate you until you're either blue in the face or I'm blue in the face. But this I mean, today's move is welcome. Don't get me wrong. A lot of people are stuck. I'm hoping that they have learned their lesson and maybe they'll just get out at some point. Especially if you're in stuff like BMNU, which is the 2x ETF. 2.5, folks, right? Up to 2.5, 246 to be in fact. So, yeah, these 2x ETFs, I mean, I've done a bunch of videos about it. It's called volatility drag or slippage. You do not want to buy and hold these things for too long of a period. Maybe a week, maybe a couple of weeks max, because even if now BMNR goes up from 20 to 30, let's say, okay? In fact, we can look at it that way. So last time BMNU, which is the 2x ETF of BMNR, was at 1230. We're down to 245, folks. Okay, so let's take a look at the same dates. Let's see how much each one is down. 1250, let's say. That was the date for that was December 10th. Okay, let's take a look at where BMNR was December 10th. December 10th, BMNR, I think it's this one right here. Yep, sticking it like a sore thumb. Yep, 1210. BMNR was 42. Okay, so we're 42 and 1250. Get it? Same day. BMNU. So proving to you guys that these are not to be bought and held. So same date, 1250, 42. Keep those numbers in mind. Now let's switch back to today. BMNR is 22, 42 to 22. At 21, it would be 50%, right? Okay, cool. Let's take a look at BMNU. 1250 to 250. What is that, folks? That's 80% or 75%, right? Now you guys understand that these things are not to be bought and held, the 2x ETFs? Yeah. But then, you know, a lot of people don't understand and they just go listen to some guru on X and then they'll just go, oh, yeah, BMNR, BMNU, Tom Lee, I'm going to make so much money. I'm like, okay, cool. You just went to the poorhouse. But so that's what's happening with Bitcoin and Ethereum. Solana is rallying. Missed buying SOLT yesterday. Yeah, $2 is range, but hey, that's actually a ripping 25%. That would have been a nice trade, but then woulda, shoulda, coulda is not going to get you anywhere other than a mental institution. So let's take a look at TLT. TLT is the inverse ETF for 20-year bonds. So if TLT is going up, that means actual interest rates are going down. And TLT has been rallying. So long-term rates kind of are going down. Maybe that will activate the dead mortgage refinance and housing market. The biggest part of the affordability index on homes is interest rates and mortgages. And hopefully, people can start buying homes again. This is truly, truly unaffordable at the moment. And the dollar index just down about 10% over the last year. And here's the 3-year dollar index. This is what they're doing to your dollars, folks. You know, 110 down to 96, right? That's 15 points. That's about 8%. And that's how much money, how much buying power you're losing. That's how much they're printing and spending. And, that's why gold, let's talk about gold. That's why gold is ripping, has ripped, and it just looks like it's going to go retest a high. Here's 1 year, 1 day in gold, right? We had that massive sell-off. This is GLD. This is from 510, sold off to 423, about 20%, literally in 3 days. And then now we're climbing higher. Same thing with silver. Is it going to go retest a high? Maybe, potentially. I don't think they will. I think it's going to go be in a trading range sideways. Same thing with silver. SLV, which is the iShares Silver Trust, went from 110 down to 70 in 2 days. That's 30%, 35%. And now it's kind of retesting the reaction high. We'll see if it's, I don't think silver is going to go to the high. I think we're just going to be in a probably 65 to 85 kind of a trading range until it settles down a little bit. And we'll see what happens after that. So metals are pretty bullish. I'm very bullish on the metal stocks, precious metal stocks especially. They're basically printing money, folks, okay? Their cost basis out of the ground is literally dirt cheap. It's less than 60%, let's say, of the current spot prices. Hecla comes to mind. I think that stock is going to rip pretty soon. I'll definitely will take a position on that. Some of them are already retesting highs or making new highs, such as First Majestic Silver and HYMC. I mean, look at these things, right? SSRM. They're all making 52-week highs. Actually, I don't know why Hecla is so weak, but then WPM, Wheaton, Precious Metals. I mean, they're all retesting new highs or 52-week highs or just about to make 52-week highs. Hecla is the one that's behind. Now, do you buy laggers in this group? Not necessarily, but it will catch up. Base metal stocks like copper and things like that are big moves. Freeport McMoran. I sold, I wish I had bought some calls with it. ERO Copper, I had sold 30-25 put credit spreads that worked for me. What else? Aluminum, AA, Alcoa. That's about to take the next leg probably. Albemarle. Look at these stocks, right? I mean, you gotta go where the money's going. But a lot of people, they just go like, oh, I want to buy SoFi. I'm like, okay, good, knock your SoFi out. SoFi rallying a little bit up to 1940, but it's in a bear market. Hood in a bear market, in its own, can't even get out of its own way. Down 50% from the high. Palantir, same thing, in its own bear market. So, when things are in bear markets, you got to pay attention to it. You can say Palantir is going to be 500 in 10 years. In 10 years, the world may not be here. I'm not sure. But then, you got to do what you got to do. Whatever floats your boat, as we say it. And so, yeah, we went through crypto. Hopefully, this is the bottom. If it is the bottom, I wouldn't be surprised, but I don't think it is. I think this is just a reaction rally that we're getting and run into resistance shortly. We'll find out when Bitcoin gets to 70K, 71, and Ethereum gets to maybe 2200. We'll find out what kind of resistance there are. Or it may just go through like hot knife through butter. I mean, these crypto's wild. We know that, right? I mean, it's wild enough for Ethereum to go from 5,000 to 1,800 in a matter of, I don't know, last October it was 5,000, went to 1,800. Would you have guessed? No. Well, you just go with the trend, okay, folks? Trend is your friend. Don't question the markets. Markets are a lot smarter than all of you put together. So, yeah, I mean, I have my list ready for to buy things, to short things, whatever it is. So far, so good. I can't complain. And yeah, Kava, my God, 85 up $17. Holy crap. No, yeah, actually, I bought it. I got a sign here, actually. Went through 1/4 of hell and then not getting rewarded. Yeah, I like it. I like the company. I had traded this company before about 3 years ago from 30 to 120, then went to 170, and it got a little too much nosebleed kind of a thing. Patiently waited 3 years to buy it back again in the 59 range. Lululemon, 181. I'm actually exactly even on that. And Netflix, I'm giving you my long-term port. Beautiful, 82.5. If they walk away from the Warner Brothers deal, by the way, the breakup fee on this is $2.8 billion, and Netflix's free cash flow yearly is about $11 billion. So figure out they'll make like close to 30% of their free cash flow by just walking away from a deal. So Netflix management, please walk away from the deal. Let the other fools buy Warner Brothers at 31. And WBD is Warner Brothers. I mean, yeah, they offered 31. Please let them, let who is it, Paramount? Yeah, I think Paramount's buying Warner Brothers. Please let them buy it, Netflix. So the stock can go. Google is the one more. Just going sideways after doubling. And UPS. That's my long-term port. Actually, I may add to UPS to my trading account now. If it pulls back to maybe 110 range, 108, 110, I'll definitely trade that. Yeah, Tesla. Yeah, it's interesting. Maybe we'll get to 425 initially, up to the 50 EMA. But, that's why we have the TSNL position. I like BWA quite a bit. I don't know if I should sell put credit spreads on that. Yeah, it's kind of every day it starts strong. It kind of gives up. Let's see. We're just going to wait for the 20 EMA to catch up. I like Lear. Definitely like this one. I like everything that's making 52-week highs. Buy high, sell higher. That's about it. The rest, I'm not concerned with whatsoever. Where is HIMS these days? Is it 15 yet? Yeah, up to 16. Jesus. What a disaster. Novo Nordisk. And people, oh my God, down to 37. Yeah, cool. PayPal supposed to get a buyout offer from Stripe. Stripe? Or no, it's not Stripe. I think it's Stripe. I don't know. Got down to 38, bouncing up to 47, 48. Buyout probably is going to be, I don't know, maybe 60. What a disaster, though, right? I mean, if you own PayPal for the last, let's see, 3 years, look at this thing. 95 down to 38. Yeah, good luck. Or worse yet, this is the 10-year chart of PayPal. Imagine this opportunity cost, right? 310 down to 38, down 85, 90%, while in the same time, literally, this is not that far, folks. July 2021, stock is 310, down to 38. Now it's 48. Think about it. I mean, what did the market do since July of 2021? Up 100%, 30%, 25%, 30% every year. Just, I don't understand people. When people go like, oh, PayPal, I'm like, okay, cool. Not with my money. So, what else? That's about it. Yeah. Let's look at the positions one more time. Yeah, I'm definitely going to add the AD&T. What else do I need to do? I don't need to do anything else. Just wait for the put credit spreads to kind of melt a little bit. I may add to the put debit spreads on SPY, a little bit more hedge. BMNU trying to sell the 3 calls now. Yeah, let him take it. I can have it. They can have it. AD&T I really like, actually. Yeah, I do like that pullback to 20 MA. Maybe a couple more days. I'll add. Yeah. Like some of the airlines. Yeah, Southwest looks nice. Delta actually looks nice. Coca-Cola. Yeah, there's a little bit of rotation going on. Excuse my voice. Walmart. Yep, same thing there. I traded Walmart, actually. We just traded sold put credit spreads, well, called debit spreads with it. That was a good trade. We got out of that. Yeah, I may add to Tesla. If this thing is going to go to 450, then we're going to make a shit ton of money on that one. But I'm just patiently waiting. Patience is the key, folks. The 3 Ps. Patience, position size, and planning. If you don't do any of that, you have no business in trading. What else? That's about it. Not much going on. Just wait. Wait until NVIDIA earnings come out, and let's see where those things are at. Alrighty. Good morning. Yeah, good question. I mean, they sold off 25-30% in gold and silver. About 50% correction now. I think they're going to be in a trading range, Doug. I think they're going to go sideways. With a wide trading range, which is tradable both sides. So yeah. But spot prices versus the stock prices are 2 different things. As I said, I'm very, very bullish. Very bullish on the metal stocks. You know, I put up like a bunch of silver stocks, bunch of gold stocks. My 52-week high list is full of those. So I think these stocks are going to do well. Because out of the ground, their cost is about $2,200. Gold is $5,200. If they hedge, they're printing money because they can deliver, right? So sorry about the voice. I got allergies and I get this attack once in a while. Yeah, that's the feeling. So I'm gonna go take care of my my allergy, and then I'll see you guys on Friday. May all your longs skyrocket and may all your shorts tank. And what else? That's about it. We'll wait for NVIDIA earnings. We'll talk about that, I'm sure, on Friday. Crypto, thumbs up. Hopefully it's a bottom. I don't think it is, but we'll find out. When I say crypto, Bitcoin and Ethereum and Solana. You know, I would like a rally. I mean, I would like to get called away in March, finally. And this rally is coming in a time where a lot of people are stuck in BMNR, cussing out Tom Lee. Tom Lee's not doing anything. Tom Lee's doing what he's supposed to do. Michael Saylor is doing what he's supposed to do. What they said they're going to do. No reason to cuss out Tom Lee. Tom Lee's not lying to anyone. Tom Lee goes, I'm going to do ATM sales. I'm going to buy shares. I'm going to sell shares and buy Ethereum. And I'm going to stake it. I'm going to get up to 5%. That's what he's doing. Now, has it been right on the price projections or guesses or whatever? Look, Tom Lee's just another human being. He doesn't know any more than anything else. Market knows best. That's the market. That's the price. Don't argue with it. You can have an opinion about it. You know, he had an opinion saying, oh, the Ethereum is going to be 20,000. Bro, what are you talking about? It's not even 2,100. So All these things, right? Because people do these projections and like, how do you know? And when he was saying that it was 4,000, did he know it was going to go down 50%? Would he have said that? No. And he was pretty convincingly saying, end of the first quarter, 8,000 and then 20,000. I'm like, bro, we're tanking. You're buying all this stuff. Who's selling, right? I mean, look, markets are the markets. Markets are going to tell you what's going on. Just listen to the market. Don't listen to me. Don't listen to Tom Lee. Definitely don't listen to any of the dumb shits on X. Definitely don't do that. Because that's quicker way going to the poorhouse. Just do your own due diligence. Understand what the risks are. Understand what you're buying. Buyer beware. What are you buying? What is it that you're buying? Right? Are you buying somebody's word and putting money in there? I mean, who would do that? So goal is to trade what's in front of you. Market's giving you a signal. Trade what's in front of you. Because that price that you see, that second, is the price. You cannot argue with that. You can have an opinion about it that is too low, it's too high. Well, then you step up and then you buy it if you're a buyer. But understand, and on the opposite side of that transaction, there is a seller. Do you think they're selling because they think it's going higher? I wouldn't sell if I thought it was going higher, right? But you're a buyer, and there's somebody against you with a diametrically opposite opinion of you saying that, no, I'm selling because it's going lower. That's what makes the market. That's the simplest way to put it. Once you understand that, you'll survive. And hopefully you'll thrive at some point. But a lot of people, buy things and then it goes down and then it goes down more, it goes down more, and they complain. They go like, oh, one day it'll go up. I'm like, no, it doesn't work like that. It may go up one day. It may. But people are so used to things going up, right? From lower left to the upper right all the time, especially because they all got involved during the pandemic, because all they know is bull market. They haven't seen a bear market. Well, we'll have one, and we'll see how they survive that one. Not my wish to have a bear market, because a lot of people will get blown out because they have zero idea of what it could be. Although we had a couple of days, this year already, massive down days where their stocks just getting trashed, just shot in the back of the house. And I'm like, yeah, but this is nothing. What will happen if the index sells off another 10, 15, 20% from here? What's going to happen to these stocks that are already down 50%? They're going to go down another 50%. Simple as that. That's why you should not deal with stocks that are already down 40, 50%. They're not cheap. Price-wise, they're cheap, but market's telling you, I'm taking the stock down 50%. You can argue with the market. So at first they take it down 10%, then another 10, another 10. And then it keeps going doing it, right? I mean, like, favorite stock of everyone pretty much on X was BMNR and Hood and Palantir. Market's not going to listen to you, right? You take Hood down 50%. Now what are you going to do? Okay. Now if you bought Hood last April at 30, you're still at a double ahead. Great, fantastic. But if you bought it at 120, on its way down from 150 to 120, right? 30%, 25%. Okay, I'll buy it. Okay, now it's 110. Okay, it's down 30%. I'll buy it. It's cheap. No, it's not cheap. And then it's 100, down 35%. Now it's 90. Now it's 80. Now it's 70, down 50%. Cheap. Oh, no. We get the next leg down on the market, if there is one. 60, 50. Now what? How long do you need to wait? How many opportunities you're missing on the other end? You know what I'm saying? Yeah. This question I get asked all the time. What if you're holding long-term 3 to 5 years? Was your opinion that? Or did you start as trading? Was your opinion that you were going to hold something 3 to 5 years or 10 plus years? Because a lot of people like you, again, I don't know who you are, and I'm not picking on you trying to be rude or anything, but a lot of people do that. A lot of people go like, I want to trade it. I want to sell some options. I get assigned, I'm fine. And then they become long-term investors from traders. Because I don't know, are you a trader? Are you an investor? Who are you? Do you know? Once you figure out who you are, then you can deal with it. Holding long-term 3 to 5 years. Okay. I can give you many examples. Okay. You could have said the same thing on UPS, PayPal, SoFi. Before it went up from 7 to 30, SoFi went from 25 to 5 and stayed there for 5 years. Same thing, Palantir came public, went to 40, then went down to 7 and stayed there for, I don't know, 2 years. So granted, time is on your side, but there are occasions, and many, that they go down and they stay down. Right? So I don't know if Hood is cheap here at 75. And I'm not going to deal with it. Well, why are you in, okay, I appreciate that. Why are you in individual stocks? Do you think you can beat the benchmark? Is the question, right? Like I put out my long-term port, do great. Just pick out some good names that are at a discount. Why didn't I put Hood in my long-term port? I don't think it belongs there. It deserves it. I still think it's expensive. So there's definitely a PE crush going on, right? Everything with high valuations is being sold. Like, there's no tomorrow. And I don't want to be in front of that train. Long term, you will be successful. Long periods of time. But why not be in an index? Right? Be in an index. Index, look, very few people, very few, including billion-dollar hedge funds with their MBAs and best software, best brains, they cannot beat the benchmark. The benchmark is the benchmark. You'll have better chance, long-term investing in benchmark, especially if you're young, power of compounding, amazing. Absolutely. But if you're in individual stocks, you better get used to the roller coaster and you got to get used to the pain, because that's pretty much the only way you can beat the benchmarks, right? So ride a Hood from 10 to 150. Great. Now you write it down to 75. Okay. Is it going to go to 35? I don't know. Is it still expensive at 75? Definitely. Is it much less expensive than 155? Definitely. So to me, Hood will disappear. Honestly, Hood will disappear because with all their clientele, if we get in a grinding 18-month bear market, the market indexes go down 25, 30%. Although they're getting into other businesses, more solid businesses such as retirement and things like, wealth management and stuff like that. Most of their accounts are YOLO traders. Average Hood account is like $6,000. They're going to get all blown out. And then what? Where is Hood going to find another million fools like that, right? Again, I'm not against, I like the company quite a bit, but not at 75. So still expensive at 75. $2 earnings, I don't know, 30 PE, 38 PE, growth rate of 12%, tripled the growth rate, not sure. At 155 it was nosebleed, it didn't belong there. But then, Wall Street will swing the pendulum one way or the other too far. So, that wouldn't be my favorite. I'm talking about Hood. So I'm talking, there are other stocks like, when I do buy UPS, there's a reason I'm buying UPS fundamentally. When I bought Netflix that I got assigned, there's a reason. I look at more fundamentals actually when I'm dealing with my long-term port than technicals. Technicals for short-term trading. Long-term, I'm looking at fundamentals. Like when I bought Waymo, Google, which is Waymo is part of Google. I know that space really well. I thought that just autonomous vehicle business on Waymo, part of Google, just itself, I thought was $1 trillion business, and market cap overall on Google with AI and everything else they're doing was $2 trillion at 152. I go like, this is ridiculous. So I bought it. And same thing with Kava, same thing with UPS, same thing with Lululemon. I look at fundamentals, but fundamentally, Hood is expensive. Palantir, very expensive still, even after a 30% drop. Because that's what stocks do. Stocks go up, then they have to wait for the earnings to catch up. And sometimes they go up much further than anybody can anticipate. Like Palantir goes to 200. What's this business at 200? I mean, forget the earnings. It's selling at 200 sales or 80 times sales or 100 times sales. Look, you can justify a price on anything, but don't be blind to it. Things can go down. Stonks only don't go up. Stonks can go down. And with the market only 1% from all-time high, is it normal that all these stocks are down 30, 40, 50, 60% from their highs? What is the market saying? Listen to the market. Mr. Market is saying these stocks are fundamentally too expensive. Forget the chopsticks, technicals, and this and that. And they cut them in half. Now they're in a waiting period. Now the market's going to go, okay, we'll see what happens now. We'll wait, but we cut them in half first, and then we'll wait. General market conditions obviously make a big difference, right? If you're in a bull market, everything goes up, kind of. But all I'm saying is, buyer beware. Understand what you're stepping up to. It's speculative with a question mark. Yeah, for me it is. That's why I didn't put it in my long-term port. I don't know. But again, I do like the company. I don't like it at this price. And I could be wrong. It could be a double 6 months from now. Again, I don't want to buy things when they're going down. Trading, anyway. Long-term, yeah, I don't mind. I mean, look, stock is down 50% on Hood. SoFi is down 40%. If you like those companies, Palantir is down, I don't know, $70, 35%. If you like those companies, you're going to think it's a discount now. It's just like going to buy a purse if you're a lady, or a shoes, or a suit if you're a guy. You're waiting for a sale, and sale shows up, you buy it. Same thing. Okay, 30% sale, 40% sale, 50% sale from all-time highs, right? But if you look at past April, where's Hood from last April? Up 100%, just about, a little bit more maybe. Where's Palantir from last April? Probably up 50, 80, 50, 60%. Those are big numbers, man. So if you bought Hood at 35 or 30 in April, at the bottom, let's say you caught it, you wrote it 5x in 6 months. What is your expectation? Another 5x? Another 5x? No. Fundamentals don't justify it. Fundamentals don't justify 75. For me. For other people, it may be. But the company is not like this, super high-tech growth kind of an engine. Yeah, they're growing. They're growing, double digits, 10, 12, 14%. Okay, cool. It's a great company. But now it has to digest that. It has to come through with earnings. And the crypto sell-off obviously did not help on Hood. I almost thought it was like a proxy for Bitcoin and Ethereum. It was supposedly 20%. Supposedly, I don't know. I didn't look at the numbers, but 15 to 20% of Hood's revenue comes from crypto trading. And when crypto goes down, obviously that slows down. And so this is the Hood problem, right? If the market gets in a bear market, are people going to trade zero DTs as much as they have? Are they going to find more money to bring to the markets after they blow their accounts a couple of times? So it's all dependent, right? But look at the difference between Schwab, Interactive Brokers, and Hood. There is similar companies out there. Look at the difference. Why is Hood down 50% and Interactive Brokers down 5% from its high, or Schwab is down 15% from its high? You have to kind of, right? I mean, there you have many choices in that group, and there's in an industry, there's a bunch of stocks, right? I mean, there's not just one airline stock, not one bank stock, not one brokerage. There's many. Buy the best, buy the leader of the group. That's what I always try to say, anyway. So here's your proof, right? There's IBKR is Interactive Brokers. Look at Interactive Brokers. Down literally 5 points, like 3% from all-time high. Here's Schwab. $107 down to 95, down about 10%. And here's Hood. And here's Webull. Right? Those are the two speculative companies, Webull and Hood. We got Webull, $5. Go buy it, right? It's with cheap. Oh, I mean, Webull, because, you know, where all the YOLOers hang out, right? That's what I call them. Was September 30th last year, $15, down to $5, down 75%. Why? Ask yourself that. Is it cheap at $5? I don't know. I rather deal with interactive brokers than deal with Bull or Hood, because a lot of people on X go, Bull, Webull is cheap. I'm like, okay, cool. You thought it was cheap at 15, then you probably thought it was cheap at 12, you thought it was cheap at 10, you thought it was cheap at 8, and now we're at 5. Obviously, it's closer to 0, okay? I'm not trying to make a joke out of it or light out of it. I'm sure a lot of people are stuck in this. And it's 5. That's what the market's telling you. You can go buy 1 billion shares at 5. Well, not billion probably, but at least 1 million shares with one click. Somebody's willing to sell it to you. What does that say? Right? So you got to be realistic when it comes to these kind of things. And I am quite realistic when it comes to these kind of things. Anyway, folks, okay, my voice is better. It's 1 hour I spent. I will be back on Friday, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Please check in. If you did like the live, put a thumbs up. The live stream is up there. Nobody wants to come on. I would love some of these X people to come on. Especially they just make option selling like, oh, it's so easy, so easy. It's just risk-free. You just can make money out of trees. And like, no. But I don't think they're grabbing it. Just grab the link and come on. We'll have a discussion, not a debate. That's it. We'll wait for NVIDIA earnings. We'll see. You know, market's going to, I'm pretty sure it's going to behave wildly tomorrow, and specifically NVIDIA stock. So maybe it'll save the marketplace. Maybe the market's not doing bad. I mean, we're only down 1-2% from all-time highs on SPY. But that range, right? That chop that we're going through for the last 8-10 weeks, yeah, it's brutal. While the underlying, you know, stocks are moving 40-50%, indexes are chopping. But we'll see. But until the Mag 7 or Mag 10 moves appreciably higher, indexes are not going to go anywhere. And NVIDIA, I think, is still the top market cap stock, right? What is it? 4 trillion, 4.5 trillion, 4 trillion. If NVIDIA goes, maybe, you know, Triple Q will go or SPY will go. We'll see. We'll find out. All right, put a thumbs up. Thank you for watching. I will see you all on Friday.